And shifting our focus to India now, the American capital market company Fitch Ratings has cut India's GDP growth projection for financial year 26 by 10 basis points to 6.4%, citing rising global trade tensions, particularly new tariffs from the United States. The revised estimate comes weeks after Fitch's optimistic March forecast. In the report published, the company has brought down India's growth projection by 10 basis points, marking a cautious shift. Fitch flagged that although India has low dependence on external demand, the escalation in trade barriers is starting to weigh on broader economic sentiment as well as investor confidence. India's overall growth trajectory has been uneven. Real GDP growth dipped to 5.4% in July quarter of 2024 before bouncing back to 6.2% in the following quarter. The Economic Survey had earlier projected India's 2026 growth in 6.3 to 6.8% range, and the official government estimate for current year stands at 6.5%. But now international agencies are pulling back their optimism. Few days before Fitch's revision, Moody's Ratings cut India's 2025 calendar year GDP outlook range of 5.5 to 6.5%, down from 6.6%, which was reflected earlier. Now, Moody's Analytics went further, lowering it to 6.1%, citing impact from US tariffs, especially on key sectors like gems and jewelry, medical devices and textiles. Globally, Fitch now expects world growth to slip below 2% in 2025, which will exclude the pandemic, the weakest performance since 2009. The US is expected to grow just 1.2%, slowing to 0.4% by year-end. Growth in China and Eurozone remains sluggish, both under 4% and 1% respectively. The outlook may still look decent on papers, but it's clear that global winds are shifting. With tariffs and global trade shrinking, India could face external headwinds despite its domestic demand strength.